Welcome to Trevisa Financial. Trevisa Financial is a purpose-driven wholesale lender. We're not your average wholesale lender. We're a team on a mission to help you open more doors.
Is offer products to home buyers that otherwise would not be able to get into a home. And there's so many.
Reach more families and redefine what's possible for first-time homebuyers, especially underserved communities.
Having diverse lending products opens doors for folks that otherwise might not have access. And so it's understanding different cultures, it's understanding different backgrounds, and the fact that you might not have had the opportunities that others have had, but there's still a way for you to get into homeownership. And so understanding that those different backgrounds exist.
At Trevisa Financial, we believe homeownership is more than just a transaction. It's transformation. It's the foundation for building wealth, stability, and legacy. Together with borrowers, we're committed to making that transformation real. Through education, transparency, and heart, we help more families step confidently into homeownership.
It seems so much further away that it's more important today to focus on this affordable lending issue, right? Or the affordable lending challenge to get people into homes.
Because when you know better, you build better. Every borrower you empower, every loan you close, every set of keys you deliver is proof that dreams don't have barriers, only bridges.
For Trevisa, it's putting some strength on that bridge, because how you help a broker close a loan, the understanding of the dynamics of that consumer who's now getting older because it's so much harder, who has profiles that we're all trying to figure out, right? When you talk about millennials and Gen Z and their income and all that. And a lot of lenders go, this is just too much damn work. And I don't know if I want to do this because it might not be worth it. I don't know how to manufacture this. Where Trevisa can come in and go, look, let's manufacture loans and let's help brokers get these people across, and let's strengthen the bridge, right? It's going to take us some time. It doesn't happen like overnight, but we know how to do it pretty well.
Join us in building bridges that turn the dream of homeownership into reality. Because at Trevisa Financial, no one serves first-time homebuyers better.
Hello, everybody, and welcome to our EEP Power Up Deal Desk Thursday. I'm going to go over the basics of EEP for any of you that are new, and then afterwards we can go into some Q&A. So if you have any questions, please raise your hand. So a little bit about me. My name is Monique Manaya, and I've been in the mortgage industry since 1997. I have worked in all array of brokers, retail, wholesale, and most recently I worked for the government entity that created the earned equity product. I helped put policies, procedures in place. I helped further develop it, along with managing, processing, closing, funding, the Native American tribe signers, and title approval. So I have definitely a very good knowledge of this program, and I'm so excited to help you with Trevisa. So here at Trevisa Financial, we're striving to make homeownership a dream come true for everyone. And one of these is through this innovative program, EEP. So how does EEP work? You have a home buyer that just does not fit into the traditional mortgage box. So you have to tell them, sorry, these are the things you need to do in order to qualify, and it might take years. Instead of having them wait on the sideline while everybody else is earning generational wealth through homeownership, you can actually get them into a home now through our EEP program. How this works is we have a government entity. This government entity is a Native American tribe. So what will happen is your home buyer will go out and they will pick the home of their dreams, the home that they want, and put it under contract, at which the buyer and seller will sign an assignment addendum that the government entity will also sign This will then assign the actual contract and financing over to them. They will continue to purchase the home through FHA financing while your home buyer is going through underwriting over at the government entity's underwriter. And then once everybody is approved, we're clear to close. Simultaneously, while the government entity is signing on the FHA transaction, your home buyer is signing a homeownership agreement. Now, this homeownership agreement does have a memorandum that is recorded on title. So this gives your home buyer the security and interest in the property that they just purchased. Let's also keep in mind that they do receive a 1098 interest statement at the end of the year. They can make remodels, updates, upgrades to the property, to the yard. Anything that is major and structural is when we probably want to go ahead and get approval for that. Let's go over some of the program highlights. So EEP is amazing because for 3.5% down, we can do ITIN, non-permanent resident, including DACA, and even US citizens. We have low and no credit scores. So low credit score is down to 580 and no credit scores at all. We have our 3-month bank statement program that is not only for self-employed borrowers, but it is also for our 1099 and W-2 borrowers. There is no source or seasoning of funds to close. We understand that some home buyers out there just don't have those warm and fuzzies for the banking financial systems right now, and they like to keep their money at home, and so there's no source or seasoning. Bankruptcies are okay. So with bankruptcies, specifically a Chapter 7, we just ask that it is just discharged 1 day prior to closing. It has to be reported on the credit report, and we need to show discharged 1 day prior to closing. For the property types, we go off of FHA. So we've got the 1 to 2 units, PUD, condo, manufactured homes, and seller contributions up to 6%. So that definitely allows your home buyer to not have to come in with so many funds, because you can utilize all of this seller contributions towards the closing costs, and even perhaps if you have leftover, buying down the rate. So when you're out looking at home buyers, who are you looking for? You're looking for specifically, ITIN borrowers, those non-permanent residents that just do not qualify for FHA anymore, and or the ITIN borrowers that don't want to put 15 to 20% down and have much higher interest rates. Again, we are looking at not only full doc employees, but we're also looking at self-employed and 1099. 1099 is perfect for the 3-month bank statement program. Other qualifying factors is the minimum 580 FICO score with only 1 trade line and 1 major bureau. So that trade line can also, if it's not reporting on credit as a traditional trade line, it can be an alt trade line. No score borrowers, as I had mentioned before. If you pull and there's no scores at all, there's just 2 alt trade lines that are required in that specific case. And then also verification of rent, only 12 months, satisfactory. We only need 12 months of employment, and our DTIs go up 50 over 60. I do want to mention that when you are looking at the 3-month bank statement program for your self-employed buyers, there is a standard 45% expense deduction in place. But this program does have a tiered expense ratio. So in that case, if you're looking at your home buyer's business, you're going to want to look, are they service-based? Are they product-based? And in this case, depending on the number of employees, we can look at using a reduced expense ratio rather than the standard 45%. And to be eligible, we just need some, a few extra few extra docs or information, such as a CPA letter or documents from the internet, etc. So again, mentioning the I-10 borrowers, this program is so amazing for them because if you look at this competitive market from Trevisa versus the other lenders out there, 3.5% versus 15 to 20% is huge. 3 months bank statement versus 12 to 24 months. Our DTIs can go 50 over 60, where traditional for other lenders is 43 max. And if you want to go any higher than that, you're typically capped at 55, which then requires 2 comp factors. The other amazing thing about this program is down to the 580 credit score. Again, others require 700 or higher. For our EEP program, we want you to know that we're here to support you. We understand that this is a little bit of a complex program. Typically takes a few times of completing a loan or two in order to, kind of wrap your brain around it. But we have everything you need to succeed. We have our hotline, 877-888-ASK-EEP, and we have a dedicated email, which is eepquestions@trevisafinancial.com. Not only do we have those support systems in place, but there's also myself. You can reach out to me at any time. We have Shari, who is our AVP of operations, and she can help out along with your account executives, which is Ben Slayton and Norma Summers. And if you need any sort of meetings scheduled to assist with TPO Connect or trainings, we're happy to do any sort of private trainings as well. So if you want to, have a training with your processors, your operations, or even any real estate partners, we definitely would love to put those trainings together so that they understand the program, they understand the product, and it just makes your life easier as well. So it is now time for our Q&A, ready to answer any of those questions. Okay, we're going to start with Edward.
I was wondering, can this program be used with the FHA rehab program?
It cannot, unfortunately, but I know that they're looking into expanding and exploring more options that it can go along with. I know that they did talk about also refinances, but at this time they just want, because it is new, it's about 3 years old. They want to just focus and build on straight purchases, and then maybe in a year or two look at expanding and going into different other options.
It seems like it would be just a logical move after that. So I was like, can I get a copy of this PowerPoint that you're using?
Yeah, absolutely. Oh, you want the actual, yeah, so I have my marketing after this meeting, they will send you out an email with a recording of this video.
Cool.
I'm not sure if it attaches the PowerPoint with it. Is the recording sufficient enough, or are you looking to actually have some of the slides for your own?
Yes, well, I'm creating my own PowerPoint for presentations.
I love
and this
it.
has a lot of information that I already need.
Yeah.
And so if I can get that, that would help. If not, I can
Yes.
create it on my own.
No. Okay, so remind me what company you're with.
Nexa?
That's right. So Ben is your account executive, and let me contact him and marketing, and then they can customize some information for you.
Oh, that's great. Thanks. I've already got the 2 flyers.
Okay,
the one
good.
for
Yeah.
the EEP. Yeah. So I'll
Yeah.
so that's all. I want to create a PowerPoint. So
Yes, no, of course. I love it. I love it. We'll get you set up for that.
thank you.
You're welcome. Okay, Claudia, do you have a question as well?
Hi, good morning.
Hi. How
Yes,
are you?
good. How are you?
I'm good, thanks.
I'm trying to calm my dog down because he was barking. So I apologize if there's a lot of background noise.
Oh, no, you're fine. Today is garbage day and my dogs go insane for the
That same here. Yes, that's why they're going crazy. Okay. My question is the turn times. What is typically a turn time for something like this? Like if we're going to get under contract, how
Yeah.
much time do we need?
Yeah. So when you obviously we would love for you to submit your home buyer first to get pre-approved at TBD
Oh,
while
okay.
they're out looking. Okay. So
Perfect.
then that way we already have them already pre-qualified. We already know what sort of conditions the government entity has asked for on them. We can start working on those while they're out looking for a home. So what we're finding is as soon as they go under contract, we're looking at about the standard 30 days, maybe 35 days, just because turn times have increased just slightly with the government entity. They are getting busier and busier, but they are trying to staff up. The only thing that would ever make it take slightly longer would be any possible repairs.
Okay.
That is the only reason that I've ever seen anything exceed past the COE date is because the property, whether it be the home inspection or the appraisal, required repairs. And in that case, that's where I've seen some extensions being needed. Other than that, I would say 30 to 35 days is pretty standard.
Okay, so that makes sense. But the appraisal would be the same, your typical FHA appraisal, correct?
Correct. Yep,
Okay.
exactly.
And what about taxes? Do we need tax returns for I-10 W-2 wage earners?
No.
Okay, so we need just what, pay stubs and last 2 years of pay W-2s?
Yeah, so let me just explain to you real quick for the pay stubs and W-2s, okay? So if they're an I-10 borrower and they're providing their I-10 number, and then you provide pay stubs and W-2s, and there's a different number that's a social security number that they may have been using, the underwriter, at the underwriter's discretion, may ask for a copy of the tax returns just to confirm that the I-10 matches it.
Okay. So we just need to match a number to something.
Yes.
Basically. Okay.
Yeah. Yep. So, and just remember that that's, you may not want to provide them up front and just see if the underwriter, how all underwriters are different. Some may ask for it, some may not. But maybe just ask for it up front. That way you have them in case they do ask for them. We can also use, if you see any sort of discrepancies in that area, we can use 3 months bank statements for W-2.
Okay, to show deposits, like if they don't get a paycheck, that was my next question. If they don't get a paycheck, we can
Yep.
just provide bank statements showing the deposit from their employer.
Yep, exactly.
Perfect.
And a lot
Okay.
of times if you're gonna go 3 months bank statement with a W-2 employee, the underwriter just likes a brief little letter of explanation as to why we went that route. So specifically, I had a question the other day about because they weren't filing their tax returns, and so the head underwriter over there just said, well, let's just put them on the 3 month bank statement program, do a letter of explanation that, oh no, it was their employer wasn't giving them W-2s. And so we just put a letter of explanation together that they didn't have any W-2s or they couldn't find them and nobody could find them. The company had gone out of business. And so that was the reason we were using 3 months bank statements.
So then there is a chance to do it without W-2s then, potentially, if there's a legitimate reason why.
Yeah, and if you don't have W-2s, then that's where you'd want to go to 3 month bank statement.
Bank statements, okay. And I believe that was, the main question I guess that I had was that the title is not going to be recorded under the client's name, correct?
No, so the vesting is going to be under the government entity, which is Tule River. And then when your client goes into closing on the same day that the government entity signs on the FHA transaction, they're going to sign a homeownership agreement. And there's a memorandum to this homeownership agreement that is recorded on title. So that gives them their security interest, but they're not vested on title.
Okay, they have a security interest. That means, but they basically can't do anything with the property. They can't sell it or they can do anything until in the future when they're able to refinance and put it under their name. Then at that point they can refinance or sell it or do whatever they want.
Or assume the FHA loan, correct.
Okay. And the criteria, and that would be done through you guys as well, or they can refinance with anybody else?
Well, so currently refinancing, I'm not seeing if I look at what's out there right now for programs, I'm not quite seeing anything that would recognize this memorandum and do a refinance. And so the two main ways as of if we were, looking at doing it today would be assuming the government entity's FHA loan, and then you could always streamline them to a lower rate, or selling the property and gaining all of the equity and then, either upgrading or, whatever they're looking to do. But as this program becomes more and more popular, and there might be some non-QM lenders that say, hey, this is recorded. We can show 12 months payments or longer. So let's come out with a program where we allow them to refinance. As of today,
Okay.
that's not there. I haven't been able to find anything. But non-QM, it seems like they're coming out with new things every day. So you never know what's going to be there in a year or two.
Okay. Yeah, it's okay, but for now, for the time being, it wouldn't be under their name, but they would still have some ownership to the property.
Yes,
And if needed to sell, let's say in 6 months something drastically happened, like they can actually sell it.
they can sell it and all of the equity is theirs.
Okay, perfect.
Yep.
And my very last question, I promise, is can I also get a copy of the presentation? I'm with Clear Mortgage Capital.
Yes, absolutely. I'll make sure that my marketing sends it out to both of you guys. And
Thank
then
you.
please reach out to me if you guys have any other questions. And I don't see anybody else's hands raised. So does anybody else have any questions today? Nope, I think we're good. Okay,
Can I ask one last question? The interest rate roughly, I know I'm not gonna hold you to it, but like what kind of interest rate are you looking out there for this type of program?
So there are 3 interest rates. There are
Uh-huh.
only 3 interest rates. There's 7.25, 7.75, and 8.25.
Oh, those are not bad. What
No,
does it depend, like what does it depend on to get one or over the other?
nothing. There's no hits, there's no add-ons, there's nothing.
Oh, okay.
It's all dependent on rebate, what your lender paid compensation is, how much the seller is paying in closing costs. So it's mainly those factors.
Are the closing costs typically the same, like 3% average
Yeah,
or more for these?
the closing costs are just a tiny bit more because the entity has a few
Uh,
costs
Costs.
involved. Yeah.
Mm-hmm.
Yep.
Okay.
And so I would try to get, as much as possible on the FHA loan of the seller paying closing costs. One of the costs that is on the entity loan is their first month payment. So make sure that, they're prepared for that. But say they were to close November 15th and their first payment was due January 1st, they
Mm-hmm.
could bring in their first month payment and and then they would not have a payment due until February 1st.
Got it. Okay. So 5% closing costs if we ask from the seller, that should cover it, you think?
Yeah, I would say about 5% and then plus their 3.5% down.
Perfect. Okay. Thank you.
Yeah.
Thank you so much.
Yep, you're
Sorry,
welcome.
I'm a realtor and a lender, so that's why I'm kind of asking a little bit of both.
Yeah,
Thank you.
no, this program is going to be wonderful for you. It's going to be great.
Thank you.
All right. Edward, did you have another question? You guys.
Yeah, I got it. I wanted to piggyback on Claudia's questions, and we can go to 6%. And so if, like, say we get a $400,000 home, 24,000 in closing costs should cover all the closing costs, the MIP, upfront MIP, and those additional fees from Trevisa. Wouldn't you agree, sort of, with that, Monique? I mean, to that, I mean, I can cover all those costs if I can get the money from.
Yeah.
In our case out here, there's a lot of builders, and they're trying to get rid of these homes, and they're doing whatever it takes, and they're coming to the table with a lot of money.
Yeah, no, so I agree. So one thing that I do will point out is the upfront mortgage insurance. It can be financed, but if you have leftover money, if you have leftover funds from the seller, then you could definitely have that paid outside of closing, or not outside of closing, but you can have it paid as a closing cost by them. You can also use part of those funds to help buy down the rate.
Yeah, that's cool.
Yeah. The only thing that you cannot use any of the seller credits for is for the entity's closing costs, which is that 1 month payment. They have a $1,400 underwriting processing fee and then a 0.5% homeownership agreement fee. So those fees are something that are going to definitely be on top of your home buyer's 3.5%. But if you can get the seller to pay everything else that's on the FHA transaction, then you're just sitting pretty.
Okay, so so the borrower is coming to the table with 3.5% plus Travisa's fees, is what you're saying.
It's not Travisa's fees, it's the government entity's fees.
Oh, that's fine, but I'm just identifying
Yes.
which fees I'm talking about that we talked about yesterday.
Yes.
That's all I'm asking. So it's that 0.5% and 0.75%, those fees and that you're waiving one of them till the end of the year.
Yes, so the 3/4 program participation fee is being waived through the end of the year, correct?
Okay, so if it's $400,000, you're gonna have 14,000 down payment, and you're gonna have those fees right there, but everything else can be covered. So
Correct.
basically, so could those fees, that down payment and those fees could be covered in a gift, couldn't it?
So you could cover the full down payment in a gift.
But those other fees not?
No, so the way that it works with the government entity fees is because they're not on the CD, they're not part of the FHA loan transaction fees. And so they cannot be added to the CD. And therefore, when you're looking at adding seller credits to the CD, they're not on there. So it doesn't really compute in all the mathematics of it.
They're not on there. I get it now. Okay.
Yeah, yep. So the government entities fees are on an initial closing cost disclosure. So essentially, when we disclose to the government entity on the FHA loan, you're going to have your loan estimate and you're going to have your closing disclosure, correct?
Mm-hmm.
Those are the entities. And so those do not get shown to or given to the home buyer. Instead, the home buyer is given an initial closing cost disclosure from the entity that lists out all of the fees and then what their bottom line is that includes everything, including that first month payment, their fees, the FHA loan fees. And so that's the document you're going to want to give to the home buyer to break down and show them what their funds to close are ultimately going to be. In addition, I like to always have that earned equity closing cost estimator filled out, because then that gives, a broader breakdown for them.
Okay.
So, once we get your first one going and disclosed and everything, then reach out and I can help you get that filled out so that you can give them something that is easier for them to read.
All right. But so basically, no matter what happens, they're still going to have some skin in the game, which are these entity fees.
The government entity fees and then their first month payment. Yep.
Okay. Yeah.
Yep, exactly.
What was the government entity fee again?
So the government entity has they have a $1,400, well, it's actually a $1,250 underwriting and processing fee, $150 notary fee. So that's where it totals $1,400.
Okay.
And then they have a 0.5% homeownership agreement fee, the first month's payment, and then there's a 0.75% program participation fee that is being waived through the end of the year.
And all of this will be in writing when we're getting the prequal done, not after we have the house picked out, or how does that work? Like they'll have all of that in writing prior to starting to shop around?
No, they won't receive that until they actually have a home picked out. But we do have a earned equity closing cost estimator Edward, do you have a copy of that? I think Edward has a copy of that. So
I do, or I have access to it because we were looking at it yesterday.
yeah,
So
so it's uploaded in TPO Connect. Claudia, do you have your credentials? Have you been in TPO Connect?
I'm not sure, actually.
FYI, I have mine and my processor is getting hers.
Yes.
Oh, cool. Okay, cool.
Good, good.
So you can enter the information there and it'll give you kind of like a breakdown.
Yeah, so we have a earned equity closing cost estimator, and you can enter in the purchase price rate. It'll spit out, you can enter in the escrow amounts, and so it'll tell you exactly like what the payment's going to be. It'll break down, what the total closing costs are going to be on the FHA loan, and then it breaks down all of the additional costs from the entity, and then it will give you your bottom line. So I know that if you don't have credentials, we want to get you credentials and then get you set up for a TPO training. If you have a processor or anybody else, then we'll definitely want to have them on it as well. Since this is a two-phase process, because you're going to have the government entity file going, and then you're also going to have your home buyer file going.
Gotcha. Yeah. I don't think I have access to it. I'm looking right now, but I do have. I thought I had a call scheduled with my AE today.
Is it Norma?
Norma, yeah. I think at 2:00 my time, so I can definitely try to, get that going.
Yeah. If you have that scheduled today at 2:00, then Shari should be on that as well, and then they'll get you your credentials and go over TPO Connect and all of that stuff.
Norma Summers, yeah.
Yep.
Absolutely. Yeah, I have it at 2:10.
Perfect.
So yeah, I just wanted to kind of get a little bit better idea and understanding of the program before, so I don't have to have her explain to me everything from scratch.
Yeah,
Yeah.
exactly. All right,
Cool.
guys.
Thank you.
Yeah, of course. Well, again, let me know if you guys have any other questions. I'm sitting at my desk all the time.
Okay, I appreciate it. Thank you for your time.
Yep, you're welcome, guys.
Yeah,
Have a good day.
thank you.
Thank you. Bye-bye.
Bye.
Bye-bye.